Hello, everybody, and thank you so much for joining us today. We are very excited to have Don Bauman, who's the Senior Vice President of Government and Public Affairs, as well as the Executive Director of the Foundation for Community Association Research. So, Don, I really appreciate your time here, and let's take it away.
Excellent. Thank you so much, Nicole, and to Omega Management for inviting me to participate today. And hello to all of you who are online in this meeting. I'm really looking forward to this conversation. A couple of just points of note. If you have any questions, please use the question and answer chat. And my colleague Kelly Schild is on the line. She will ask any questions of me that I might need to address as we're going through the presentation. So please feel free to use that question and answer chat. I'm very much open to any questions you may have, so please bring them on. I also am going to be using a polling feature in my presentation. So I'm going to ask you at some point to pull out your phone and to text for me, so you can participate in some of the poll questions I have. I'm not using the Zoom poll. I'm using a different poll. So I would love for you to participate in that. And when we get there, I will let you know, and you can bring out your phones and participate in those polls. So I was asked to talk a little bit about the state of the community association industry, homeowners associations, condominiums, housing cooperatives. But first, let's just talk a little bit about Minnesota. Let's talk about where all of you, most of you, I think, live and work. So the Foundation for Community Association Research each year conducts some research on the number of people living in community associations, and we break that down to a state level as well. So in Minnesota, there are approximately 1.5 million people living in associations, living in nearly 8,000 community associations. Importantly, these residents pay $2.8 billion a year to maintain their community. You know that. It's what you pay monthly, quarterly, annually for your monthly assessment. Now, what you may or may not know is what you pay to your community, often those costs, that payment would otherwise have gone to a local municipality for local municipal services, trash removal, street maintenance, landscaping, beautification, sometimes parks, and other amenities. One of the things that we also do at the Foundation for Community Association Research is conduct every other year a homeowner satisfaction survey. So what we do is we engage a polling company. This year we engaged Zogby International. We have for the last 10 years to reach out to their contacts, third party, not community associations institute, the third party, and ask them some questions about homeowner satisfaction. A few tidbits that we are sharing with you today: 84% of those people always or usually vote in state and local elections. 86% of the survey vote in national elections. And 89% say their association rules protect and enhance their property values. Now, before I go on and talk about some of the issues facing the community association housing model, let me tell you a little bit about CAI, Community Associations Institute. That's the organization I'm with. That's the organization that Nicole is presenting you with today. So we are an international organization. This year, we're celebrating our 50th anniversary. We're a nonprofit membership-based organization. So people join our organization for education, information, standards, guidance, advocacy, and other trends, and connection with networks of business partners serving the community association housing model. There is a chapter in Minnesota. We have 60 chapters throughout the country and throughout the world. We have more than 43,000 members. Our membership includes boards, and I think many of you fall into this category, boards of condominiums, homeowners associations, or housing co-ops, as well as the managers and the management companies and the business partners serving the community association housing model. I'm going to give you some information at the end of this presentation. If you're not already a member of CAI, you should be. There are some amazing resources that I am going to share with you throughout this presentation, but what I share with you today is really, truly just the surface of the tremendous amount of resources that we provide to board members of condos, co-ops, and homeowners associations. I'm also with the Foundation for Community Association Research. I'm the executive director of that organization. We solely focus on research for the community association housing model. So I will share a website with you later so that if you'd like to go look at some of the research projects we've done, I think you might find that valuable. Some of the current issues, though, facing from our perspective as an international organization. And by the way, I'm based here in Washington, D.C., and I'm the lead lobbyist for CAI at a federal and state level. I manage all of our government public affairs. So some of the current issues facing the community association housing model: diversity, equity, and inclusion, civility, mental health, threats and violence, rising costs and labor shortages, attracting talent, especially to the community association management profession. And then I'm going to give you just a really high level legislative and regulatory update on some of the trends that we're seeing throughout the country. Starting with diversity, equity, and inclusion. So while this is an important topic, I think we're hearing a lot of conversation about this topic around the country beyond the community association housing model. It's important to us as well because it impacts our community. One of the studies that we did a couple of years ago, the Foundation for Community Association Research, was trying to quantify the number of discrimination complaints filed by owners against their association, to try to measure what that feeling of discrimination might be in the community association housing model. And there were some examples that made us realize that it's a topic that we need to talk about more, and a topic that we as an organization, CAI, needs to take a leadership role on. So what I'm going to do is break this topic down into two areas. One, I'm going to tell you what our organization is doing, and then I'm going to have some polling questions where, again, I'm going to ask you to take out your phone and participate in some of these polls. So CAI, the Board of Trustees, which is an international board of trustees, adopted a DEI statement in August of 2021. And the purpose of this is to demonstrate to our staff and to our members that we firmly believe in diversity, equity, and inclusion. And we believe in the unique strength of every individual, and that diversity makes organizations more successful and communities more fulfilling. So you'll read this this statement that I have here that has been adopted, and this has been our North Star as an organization to help us identify what we can do for our staff team and for our membership in order to create more diverse and inclusive communities. So some of the things we've been doing are to the purpose to create awareness, to provide education to our managers, to our board members of condos and HOAs, to develop resources that are valuable, and incorporate this in all that we do. One of the things that we have released, and this came out in 2021 as well, is our Diverse and Inclusive Communities Guide. You can see this link, and maybe even Kelly will put this link in the chat, or I'll do it later. But this Diverse and Inclusive Communities Guide is about a 12-page document that provides a sample policy for your board to adopt for handling harassment complaints or discrimination complaints. It also provides for a how to handle a harassment complaint if it may qualify under a fair housing complaint under the federal government. It also provides an equality commitment, a commitment that a board can adopt that demonstrates the interest and commitment in the community to diversity, inclusion, and equality. So I hope that you take a look at this guide and download this guide and share it with your board and potentially adopt that equality commitment and share it with all of your residents. I think it's important. So one of the things that we have realized, and I wanted to share this with you as we've been navigating this journey, is why diversity, equity, and inclusion is good for business. So diverse businesses are 36% more profitable. Certainly supports to recruit and retain staff. It expands your customer base. It drives employees and business growth and improves customer service. And there's a higher level of creativity and innovation. A lot of this can be completely transferred to why DEI works in a community association. You certainly want to recruit and retain volunteers who are strong and committed to the community. You want to improve customer service. You want your owners and your residents to be happy. And you want people to feel like there is an opportunity for creativity and innovation. Some of what we've done as an organization is providing some tools to chapters. We're looking at integrating this into all of our coursework and course management, as well as just having this be part of our conversation on a regular basis. Okay, so we're going to start this polling. You can see my slide. What I want you to do is take out your phone. You can see your phone. Take out your phone. Open the texting app. Text to, the number I want you to text to is 22333. Okay? You open the app, open a new text. The number you're texting to is 22333. You're texting the word Omega to 22333. Okay? I'll give you a minute. Okay, now what I'm going to do is I'm going to show you a series of questions. It's going to say that you are now logged into the Omega survey. It may say law seminar, disregard, it says Omega, that's what's really important. So these answers are typically yes, no answers. You will answer with an A or B. The first choice of the answer that I'm going to give you is going to be A, and the second choice is going to be B, the third choice is going to be C. So if it's yes, no, unsure, first is A, yes, second is B, no, third is C, unsure. So let's go to our first question. And the reason I want you to do this right now is because this is going to show up live on our screens here. You'll be able to see what other people are looking at. Okay, thinking about diversity. Does your community and organization have a program specifically, does your community have a program specifically addressing diversity, equity, and inclusion issues? I love all this participation. Thank you so much. Okay, looks like we stopped. About 83% no, about 17% yes. If you have something interesting that you're doing that you're saying yes to, put it in the Q&A so Kelly can share that with others, or others can see it. All right, here's the next question. Regarding DEI, do you believe your community meets the needs of your homeowners? Yes, no, or unsure? I think the honesty here is awesome. With 53% unsure, how would you know, right? Unless you're having that conversation. Since so many said you're not really having that conversation, then maybe you're not really sure if it's being addressed. Maybe it's something that you do want to talk about. And one of the ways to talk about it is to look at the equality pledge that I showed you a few minutes earlier. Talk about that equality pledge with your board. Talk about it with your community, and I think you'll get a feel for whether you are meeting the needs of your homeowner. Okay, excellent, thank you. Has your community hired a consultant to facilitate an internal DEI initiative? Yes or no? I have a feeling this is probably going to stay at 100%. Oh, I love that. If anyone has hired a consultant, I would love for you to share what that journey looks like in the Q&A for others to see. I think that'd be cool. Okay, I'm going to move along to the next one. Is your community taking any steps to improve your diversity, equity, and inclusion? Yes or no? Okay. All right, and this is the last one in this area. Which of the following steps are you taking to address DEI? Employee training, client training, maybe that would be homeowner training, inquiring with business partners regarding their diversity initiatives, hiring practices, or other. Now, I know that B is probably left over from the last question. And this is the last question in this area. You know, before we started talking about talking about DEI initiatives, I never really thought about inquiring with business partners to see what their diversity initiatives are, which I think is an interesting approach to holding people accountable if this is something that's important to your community. Again, I encourage you to share that other in the question and answer area so that others can see. Okay, thank you for doing that. So there are two other areas where I'm going to ask you these types of questions. The next is related to civility, mental health and wellness, threats and violence. You know, unfortunately, I think that for a variety of factors, we have seen an increase in mental health and wellness concerns in our communities, everywhere. In our communities, in the workplace, in schools, everywhere, we're seeing a mental health crisis among us. And I think the political polarization has something to do with it. I think COVID has something to do with it. But it does impact our communities. Further, there have been threats of violence against boards, against managers, from homeowners. And maybe that threat of violence comes from a place of dissatisfaction or thoughts that there is discrimination or inequity, or maybe just mental illness. Whatever the reason is, we have seen that these issues are out there. Now, I'm not saying these issues are predominant, happening in every single community, but they're out there. The mental health issue is predominant, and I think exists in nearly every community. It's just to what degree it exists. Relative to threats and violence, that's very rare, but certainly we have seen it, we have heard about it. And so I wanted to talk a little bit about what CAI is doing and what resources we have to support you, and also talk a little bit about what you guys are doing to address some of these issues. So from the CAI front, a couple of years ago, we also established and adopted something called the Civility Pledge. And this is a pledge a community association board would take to, it's a set of 5 or 6 principles that demonstrate in that community that that board is committed to holding civil discourse, to holding conversations, especially on difficult topics, that are on a platform of civility, that everybody has an opportunity to say what's on their mind. They're not going to be judged. They're not going to be told to leave. That everyone, there may be difference of opinion, and this civility pledge is a commitment by the board and a reciprocal commitment by the homeowners in that community that they will live by these civil principles. Go ahead and take a look at that, download it. I think it's a really valuable pledge for you all to take, which can address some of these issues of certainly incivility in a community, difficult topics, difficult board meetings, and that may be a solution. We've also had community conversations, a webinar with hundreds of people on this webinar to talk about conflict in a community and strategies for board members and managers to address the possibility of violence or a threat in their community, especially against them. And now we looked at this, and as it was presented, as a fire drill, an opportunity to have tools and information available to you when you may need it, if there is a rare circumstance where it's needed. So we had this active shooter, a part of this conflict resolution program and strategy was an active shooter run, hide, fight program provided by the local police department right here in Alexandria, Virginia. I would encourage your community boards to also hold something like this for your community board. Again, it's a fire drill type of tool and resource in your toolbox. So I'm going to ask you to pull out your phone again and see if you can help answer 4 or 5 questions that we have on this topic. Does your community have a specific mental health and wellness program for employees or homeowners? I know some of your communities don't have employees, then just answer for homeowners. But if you have for employees or homeowners, either one, just answer yes or no. And it could be that mental health and wellness program is through your health insurance as well. Okay, I'm going to go to the next question. Before you answer it, I want to restate it because I meant to change one of the words in this one. Have you seen a rise in mental health and wellness concerns in your community? Not with your client community, in your community. Have you seen a rise in mental, yes. So with no program addressing it, and it could be the program as simple as the civility pledge to address some of these concerns, talking about them, identifying, working with individuals or professionals to help identify mental health and wellness concerns that should be spotted and that would be beneficial for boards and managers to see in advance, and then determine how to handle those situations. This is a pretty high number, 67%. Let's go to the next question. Have you ever experienced threats of violence by homeowners against your board? Threats of violence, or violence, but threats of violence. Okay, so it looks like between 20 and 25%. Okay, excellent. Have you conducted an active shooter or violence training program with your staff and or your board? Okay, again, I don't think that it's important that, I don't think it's critical that it be done today, tomorrow, next week. But again, it's a fire drill type situation to have someone contact your local police department, have them come out. Oftentimes they will do a free program for your board so that there can be some conflict resolution strategies to help bring down difficult situations, to help identify potentially dangerous situations, etc. Okay, thank you for participating in that. I am going to have one more, but it's going to be in just a little bit. One of the areas that we have found to be of concern at this time is attracting talent to the community association management profession. You have a mega management, you guys are in great shape, but I will say management companies are really struggling to bring in good people. And it's not just in Minnesota, it's not just in the US, it's actually all around the world, but it really is impacting the way services, the way management companies are operating. And likely, I'm not saying this for Omega, I'm just saying it is increasing the management fee because hiring people has become more difficult and they have to pay more in order to get the right people in to do the right work for communities. that's having a ripple effect. So we're going to talk a little bit about some of our initiatives, and then I don't have any polling questions for this one, but I'm going to share with you some insight into a research project that we did. So we conducted a research project, the Foundation for Community Association Research did at the end of 2021. And it's called Attracting Talent to the Community Association Management Profession. It's a two-part survey. The first part of the survey was for CEOs of management companies, asking them if they have openings for community association managers and if they believe there's a shortage of community association managers. The second part of that was to community association managers who work for communities and for management companies, saying, what do you like about your job? Why is it rewarding? What is most valuable to you as an employee in your job as a community association manager? So you can download this research report by going to foundation.caionline.org, but I'm also going to share with you some of the highlights, some of the findings. Okay, first, 97% of the CEOs or recruiters that were surveyed believe there is a shortage of community association managers. 97%. 63% reported that they have current openings for community managers. And nearly 60% said they have between 2 and 6 open management positions. That's a lot. I'm not sure how these companies are able to continue to deliver the high level of services when there are so many open positions. Some of the source of referrals, job search, job boards, other employees, business partners, industry job boards, community association board members or homeowners, 2%. You can increase that. You can make it more. You know good people who would make good community association managers. Tell Omega about them. I can almost guarantee you they have a few openings for good community association managers. But here is also, I think this is so important for community association boards to hear. These are the major motivators for community association managers. Now, sure, they are there to serve your community, but you want people who are happy, who are pleased with what they're doing. So this is what motivates them. 72% said what motivates them is helping people. 73% having a variety of different tasks. 84% solving problems. Earning a paycheck is only 56%. The opportunity to lead, resolving disputes, flexible hours, increasing a community's financial standing. A lot of these things are not based on salary and compensation and benefits. They're based on providing value to those communities. And I assure you, that's what your manager wants to do. Help people have a variety of tasks, solve problems, work together. So I think that's important for everybody to see. I'm going to skip that slide. If you know people who might be interested in the community association management profession, we have a publication here. Here's the web link. It's kind of weird the way it's paginated, but go ahead and type that out and go online to get this Opportunity Knocks publication. Again, all of this is free. This Opportunity Knocks publication gives people an idea of what the community association management profession is, what the qualifications are, what the pay is, the average pay, as well as what people need to do to become a community association manager. Again, if you know good people, please share this with them and see if you can't get them involved. Okay, one of the other areas of trends that we're seeing impacting community associations is the rising cost. This is the CPI index, the rising costs of everything, labor shortages and rising costs of everything. It's having a ripple effect on our entire economy. And guess what? Unfortunately, community associations are impacted by this. And you need to be prepared to address these issues because they're going to come out in your budget. And we are going to have a couple of more questions that I think that you'll find interesting, and I hope that you can participate in. The first question is your community increasing your next fiscal year budget based on rising costs and increased CPI or inflation factors? And thank goodness everybody is saying yes, because it's happening. And so if you don't prepare for it, there will be a problem. Now, I know the question too is, then how do you talk with your homeowners about these rising costs? Are you going to have to increase assessments? Likely. So then how do you have those conversations? Maybe you want to adopt a civility pledge and go in and have those conversations. Certainly people are interested in this, right? And if there's justification, if there is information, take a picture of the screen right now. Say that you were on a webinar with 85 other community associations and 100% of them are increasing their costs. Feel free to do that, because that will help tell your story, why this is important and how it's impacting other community associations. Okay, next one. What percentage increase are you suggesting in your budget? Now, if you don't know, that's okay. A is 0%, B is 1 to 10%, C is 11 to 25%, 25 to 50%, or more than 50%. And listen, I understand that there are different size budgets for different things. This is a very general question, but it will just give you a snapshot sense of what other people are doing. And I'll tell you, I've done this presentation before with different communities and even management companies. And I'll tell you that 1 to 10% probably is the one that usually gets the highest number of responses. Okay, excellent. I'm gonna let you take a picture and then I'm gonna go to the next screen. Okay, the next one screen is a multiple choice. If you want to answer with more than one response, you have to do it, you have to hit enter after each of your responses, okay? So the question is, which of the following areas are you seeing increased expenses for your community? If you want to do A, B, C, D, E, F, G, you have to A, then enter, B, then enter, not all in one. So staffing, management services, maintenance, funding for reserves, condominium safety measures, which is maintenance and building inspections, insurance, pool service, landscaping, legal fees. I think maintenance is what we're seeing a lot of, insurance a lot. The Foundation for Community Association Research is going to come out next month with a SNAP survey on insurance premiums, because we are hearing across the board, especially in areas where there have been catastrophes, a tremendous increase in insurance premiums. I'm talking about from $50,000 to $250,000 a year. Really tremendous increases. Okay, this is fascinating. This is excellent. I'm going to give you just a minute. Y'all want to take a picture? You can do that. Okay, the next question is also multiple choice. Where do you obtain the information to help you justify increases for your budget? Published inflation numbers, accountants, peers, managers, reserve professionals, attorneys, managers. Which one? The published inflation numbers, and I see that as an answer often, which is great. I feel like those who can read those and interpret and then take action, you're smarter than I am. I love that. And that's why I would go to my accountant or my management company or another banker here. But it's great that you can interpret those. Okay, I'm going to go to the next screen. Do you use the same, and this is the last question, use the same inflation numbers or increases for your operating budget as well as your reserve budget? Yes, no, unsure. Okay, fair enough. But maybe take a look at that reserve budget, because I think there's an impact on the reserve budget as well. I'm not the professional to guide you on what that increase should look like, but my guess is there should be an increase. If you have a reserve budget, you may want to engage your reserve professional, engage your management to talk about budgeting for reserves. All right, Kelly, I'm assuming I don't have any questions. So I'm going to move forward to high level rather quickly, our 2022 legislative report. These are also trends in our industry, and I share them with you because this is what I do almost every day, so I can't help but share this stuff with you. So in 2022, let's talk a little bit about condominium safety, state legislation, laws, and regulations. So everybody heard of the tragic condominium collapse in Surfside, Florida, June 24th, 2021. CAI immediately put together several working groups to identify public policy issues that legislators, state and federal, may want to start talking about to make sure this doesn't happen in their community. CAI, our organization, Community Associations Institute, we're the only organization of our kind in the country. And we're only international organization of our kind. And we knew that it was our lane, that we needed to take a leadership role to identify what we can help put forward to make sure this doesn't happen again. We had dozens of conversations with a variety of organizations, with legislators, organizations like the National Association of Counties, the National League of Cities, National Association of Home Builders and Realtors, and National Association of Housing Cooperatives and Building Inspectors, etc. We put together 3 working groups with 600 people total to get as much experience and input as possible. We had experience from condominium, homeowner association board members, managers, and then a lot of experts serving in these roles, architects and engineers, building inspectors, reserve study professionals, insurance agents, attorneys, etc. So we put together a public policy document, a guide that was a recommendation to our board of trustees. Our board of trustees approved, and you'll find our condo safety public policy report on our website. We put this together in 4 months because we knew that we had to have solutions for legislative sessions, state legislative sessions that were going to start at the beginning of 2022. So we adopted this by November 1st and started having conversations with legislators immediately. So let me tell you what happened in 2022, just specifically on condominium safety legislation. So in Florida, Hawaii, Maryland, New Jersey, and Virginia, they introduced legislation that would require building inspections of condominiums. Only Florida and Virginia passed legislation. Florida has some really comprehensive legislation they passed, and I'll talk about that in a minute. Virginia, the legislation they passed was to create a study group to really do a deep dive into determining what those building inspection requirements should look like. For reserve studies and funding, all of this should be familiar to you, what a reserve study is and funding your reserve studies. You know, most states, it's not mandatory that you have a reserve study, nor is it mandatory that you fund that reserve study. So we're definitely seeing an increase, a shift in the number of states mandating reserve studies and funding. Florida, Illinois, and Maryland all passed legislation that would mandate reserve studies and funding. There are a couple of federal pieces of legislation that I'm going to talk about in a minute. In addition, Fannie and Freddie came out with a condo and housing co-op lender requirement that has created some problems. I wish I could see all of your faces right now to see if you could either raise your hand or show me a face that would indicate that you have experienced these Fannie Freddie lender questionnaires, because I suspect you have, and I suspect the experience has not been positive. A couple of bills that are available right now, a couple of bills that are out there right now, the federal government. One is the SAFER Act, and this act was introduced by Debbie Washington Schultz, Congresswoman Schultz. She represents the Surfside District in Florida. And this bill creates a government-backed loan program for homeowners to pay for a special assessment for critical repairs of their condominium building. Okay, we support that. It's one piece of the puzzle to help create more stable, safer condominium buildings, especially those buildings where they haven't been taken care of, and maybe the people living in those buildings don't have the resources to be able to fund their repairs. So we support this piece of legislation. There's another piece of legislation called the Rapid Act. This is a second piece of legislation introduced by Debbie Washington Schultz as well, Congresswoman Schultz. And this one creates a government-backed loan program, just a loan, low interest, government-backed for the condo association. Take out a loan to fund critical repairs for the condo building. Now, these two bills were introduced this year. I do not expect they're going to pass by the end of the session, which is December, which is early January. They'll be reintroduced in the next Congress, but it's important that these bills were introduced because it's created conversation, and it's created conversation with many banks to talk about options for low interest loan programs for these associations. One of the key pieces of these loan programs is it would make it a 30-year loan. So if the condo building is pulling out a 30-year loan, right now, typically the loan programs for critical repairs in condominium buildings are 15 or 20-year loans. And the payback, 10, 15, 20-year loans, the payments on those loans are much more significant than if it was a 30-year loan program, which just makes it so much easier for those residents to be able to pay back the loan product. So the Fannie Mae and Freddie Mac condominium questionnaire for lenders. This has created a problem for many condominium buildings. Boards that are being asked to answer questions about whether the condominium building is safe or not, whether the condominium building is going to violate any future laws. There are approximately 20 to 30 questions on this lender questionnaire. The majority of them are easy, no problem. The condo board members or management can provide the information, but there are a handful of questions that are impossible for a manager, management company, attorney, even an engineer or a board member to be able to provide the answer to. And it's creating a bottleneck in the sale of condominium units throughout the country. So we have been lobbying Congress as well as Fannie and Freddie and their conservator, FHFA, the Federal Housing Finance Agency, saying, please stop these changes. We have suggestions for other changes, like narrow the scope of who you're asking these questions of. If the building is 20 or 30 years old, ask the questions of that building. If the building is a high-rise building, ask the questions of that building. If the building is on the coast, ask the questions of that building. But don't ask every single question, every single building of these questions, because it's creating a problem. 72% of respondents to a survey that we put out there said that they've experienced an impact due to these Fannie Freddie lender guidelines, and nearly 30% said that there have been lender denials in their building. We did put a guide together, which I'll show you in the next slide. We put a guide together. It's on our condo safety webpage that will help give some advice and guidance to boards and managers trying to answer some of these questions. So please go take a look. This guide is free. Feel free to download it and take a look.
Dawn, we do have a clarification question.
Yes.
Are association fees going towards the Rapid Act?
Are association fees going towards the Rapid Act? No. I don't know that I fully understand the question, but the Rapid Act is a low interest loan program for condominium associations. So if the condo wants to pull out, needs a loan for critical repairs, they'll be able to take out that loan for a government-backed loan. It'll be low interest and it'll be a 30-year loan. Now, who pays that back? It's going to be paid back by the homeowners, right? The homeowners pay for whatever the condo association is paying for. Does the assessment go towards that loan program? No, it's just a loan program for the critical repairs. I hope I answered the question. Okay, I'm going to keep moving. If I didn't answer the question, please ask additional information. I want to share with you what Florida law passed, what Florida's legislature passed this year. Now, remember, that's where the condo collapse happened. Something needed to pass. There was some drama around it passing because it's Florida, and why wouldn't there be? This is a really comprehensive piece of legislation. During the regular session, the legislation didn't pass. But following, Governor DeSantis called a special session for insurance-specific issues. And during that time, a very comprehensive condo safety bill passed. And here's what that bill looks like. So it requires building inspections of condominium buildings that are 30 years old, and every 10 years thereafter, it will have to have a building inspection. At 30 years old, that building inspection is a visual inspection by a qualified either engineer or architect. The legislation also provides for mandatory reserve study and funding for critical structural components of the condominium building. The building, the floors, the windows, the plumbing, electrical, etc. Formerly in Florida, the homeowners attending the annual meeting, voting on the budget and voting on funding reserves, could have the opportunity to vote against funding reserves. Well, that has been removed from their law now, specifically for funding critical structural integrity components. And then, of course, this bill provides, a legislation that passed, provides for mandatory transparency. So all owners will have an opportunity to access any building safety information they want at any time. It also provides really clear developer requirements for building inspections, structural integrity reserve study, and that structural integrity is not for everything, not for all components of the building, it's just for those structural components of the building, and funding requirements prior to transition to the resident. It also is engaging the Department of Professional Regulation to establish a database of all the condominium buildings, their locations, the age of the building, etc., which will be a really valuable database for the state to have. Now, associations are going to have 2 years to comply with these requirements. I'm guessing during the 2023 legislative session in Florida, we're going to see that 2 years extended, maybe to 3 years, maybe to 4 years. But we're going to see that extended because there's already been a little bit of heartburn, especially on the reserve funding piece of it, in the event that associations just haven't been funding reserves as they should have. Okay, I'm going to go through this pretty quickly. The next couple of slides give you an idea of what the reserve study and funding laws and legislation look like around the country. So I know you're going to go right to Minnesota to see what's happening there. So there is a reserve study or reserve funding requirement in Minnesota. The states that are that teal color have a reserve study or funding requirement. The green states have a budget disclosure requirement of reserves. So during the budget approval process, the association owners should be notified, must be notified whether there is a reserve study or reserve fund. The yellow states have nothing related to reserve studies or funding. I'm going to come back and talk with you guys again next year or the year after. And I'm telling you, this map is going to be way more teal than any other color. That's the trend that we're seeing. Building inspection laws. Now, this was shocking to me. Following the condo collapse, we started researching what type of building inspection laws exist for condominiums. Now, this is for established buildings. This is not a certificate of occupancy for a condominium building that's just been built. These are established buildings. How often and when should they be inspected? So the blue states have some local ordinances that require building inspections of condominiums. So for example, in Wisconsin, Milwaukee has a requirement for condo buildings to be inspected every 15 years. In Illinois, it's Chicago. In Missouri, it's St. Louis. In Ohio, it's Columbus, Cleveland, and Cincinnati. In Pennsylvania, it's Pittsburgh. In New York, it's New York City. And I'm going to talk about New York City in just a minute. The green states have a statewide requirement for building inspections or something like that. California, they have a balcony inspection requirement. Florida, I just told you they now have a building inspection requirement. New Jersey has a building inspection requirement for condominiums, but the board can waive out of it if they have a good reason to waive out of it, and not having enough money can be a good reason to waive out of it. So, but New York, Washington, and Colorado, I don't want to miss those. They have local building inspections. Washington State and Seattle, Colorado and Denver, they have local building inspectors who are obligated to go out and inspect their high-rise buildings on a regular basis. Now, let me talk about New York because I think that's where the best requirements exist. And I wouldn't be surprised if we see this in a place like Minneapolis, St. Paul. In New York, the buildings must be inspected every 5 years, visual inspection by a qualified inspector. The building must be inspected, the balconies must be inspected, and the parking garages must be inspected. I think that's what that's the trend that we're gonna see more of. Some other state trends that we've been seeing. So in 2022, 46 states were in session. We still saw a lot of activity that were residual activity from COVID-19, especially virtual meetings and electronic voting. We saw a lot of condominium safety legislation. We did see some legislation related to affordable housing. You guys are the king and queens of affordable housing, especially Minneapolis, St. Paul. The authority to fine. We've seen a compromise, or we've seen legislators question whether associations should have the right to fine for non-compliance of rules, which has been interesting. Okay, I'm going to go through these a little bit quickly. So virtual meetings. So in Minnesota, y'all have a statute that explicitly allows virtual meetings. You see those states in green also have the state statute that allows for virtual meetings. This is important, so I'm just going to stay on this slide for a minute. Believe it or not, there are still some restrictive covenants out there that in homeowners associations that are discriminatory, that say no white people or no black people can live here, or only white people can live in this community. White, Anglo-Saxon, Episcopal, Protestant individuals can live in this community. Obviously, it's illegal. Obviously, it's not enforced, and it's old, but they need to be removed. Those types of restrictive covenants need to be removed. And so the states that have, the states that have an explicit process to remove, for the board to be able to remove those discriminatory covenants, we are advocating for that so that it doesn't cost to go to the entire membership to try to amend those covenants to remove the discrimination and unenforceable, illegal, discriminatory information. Okay, I'm going to move forward a little bit quickly because I wanted to get to this slide. If you all are not members of our organization, it's not expensive. The best community associations have the best boards, and being educated, knowledgeable, knowing standards of practice and best practices. We have so many incredible resources that I hope that you can just go on our website. You'll find, even if you don't join, you'll find a lot of resources that are free to you. But I do think it's in your best interest as community associations to join our organization and become part of the CAI network. And also just keep in touch with us. We're on Twitter and LinkedIn and Facebook. We have some blogs and other things like that. If you have any questions for me personally, just take your phone up to the screen and go to this QR code and download all of my contact information. Happy to hear from you anytime and happy to answer any questions you all may have. Thank you so much for this opportunity, Nicole. I really appreciate being with your group, with your clients. It's really been a pleasure. If there are any questions, I'm happy to answer them at this time.
Yeah, so we've got two questions here, Dawn. The first one is regarding insurance.
Okay.
What information have you heard about the future of insurance or the long-term impacts on their rising costs?
You know, I'm not an insurance expert, but what I have heard in my role is that insurance is cyclical and does rely on or is impacted by the catastrophes that you see in our country: fires, floods. climate-related catastrophes, building collapses, etc. However, there is a cycle to it as well. I think that what I've heard from insurance professionals right now is a crisis indeed, and I'm not sure what's going to happen to pull this crisis back. We're actually looking at trying to figure out what type of solutions may be out there. For example, in Florida, there's a public-based type of it's a government-based type of insurance backing program. So we're exploring whether those are options in other states or at the federal government, which takes an act of Congress, which takes forever. However, we're hearing it's a crisis. We're also hearing some hope that there is some cyclicalness to these insurance rise and falls. So that's as much information as I have, except that you're not alone. This is being felt around the country.
And then the other question is around communicating out to homeowners in terms of increased assessment costs. Do you have any other additional tips on how the board can communicate that effectively out to the homeowners?
So I think, you know, I hear this all the time: communication. I do think holding open meetings to have conversations, I know it's difficult, and I know and holding Zoom meetings to have those conversations and presenting clear, direct facts and information. So here's our budget. We went out and we got 3 bids for, let's say, landscaping or maintenance, and here's what we came back with. All of these costs are rising. I think just sharing as much information as possible, being as transparent as possible, and being open to conversations, even if they can be difficult conversations, is really going to be helpful in having successful conversations. And adopt that civility pledge.
All right, that was it for questions that we currently have. We will be sending the links out, or Nicole will be sending the links out that we have provided today. But any last minute thoughts, Dawn?
You know, people don't often thank you for your work as a board member in your community association. And I will say, on their behalf, I would like to thank you on your residents' behalf, because it's such important work, it's meaningful work. And we have found in our homeowner satisfaction survey that 77% of residents say they believe their board members are acting in the best interest of their community. So even if you hear from that 23% who maybe doesn't feel like you're doing the best interest for your community, overwhelmingly, the majority believes that you're doing what's in the best interest of your community. So keep doing that. And I hope you continue to get some reward from your role as a board member in your community.
Great. Thank you, Dawn. Thank you, everybody, for joining us today. And I hope you have a great afternoon.
Thanks, everyone.